Good morning, ladies and gentlemen, and welcome to the California High-Speed Rail Authority's Board's Finance and Audit Committee meeting for this day, November 7th, 2024. Thank you for joining us. We'll jump into our agenda. First of all, the Secretary will let the people from the public know how they can address the board, those here, excuse me, and those who may be on their telephones.
Thank you, Mr. Chairman. Good morning, everyone. Before we begin public comment for the California High-Speed Rail Finance and Audit Committee meeting, I would like to review some important information. For members of the public who have joined in person and wish to provide public comment, you will be called in the order you received your card. If you are joining the meeting via Zoom and wish to provide public comment, please use the raise your hand feature located at the bottom of the app. If you are calling in by phone, pressing the number 2 will raise your hand and put you into the queue. Speakers will be called in the order their hands are raised. Once you're in the queue and your name is called, please click the prompt on your screen to allow your microphone to be unmuted. If you're joining by phone, we will call in the last 4 digits of your phone number. At that point, you will hear a message that your phone is being unmuted. Each speaker will be given 2 minutes to speak. I will remind you when you have 15 seconds remaining. When it is your turn to speak, please speak slowly and clearly, say your first and last name, and if applicable, please state the organization you are representing. Mr. Chair, we have no public comment.
All right, thank you. It's nice to start early. Alice, will you also note for the record that all the members of the committee are here?
Yes.
Ladies and gentlemen, we'll move on now with today's agenda. The first is the approval of the minutes for the September 26th meeting. Okay, motion and second, all in favor? Aye. Okay, no objections. Moving on to item number 2, we'll have the audit report by our Chief Internal Auditor. Good morning, Ms. Rivera.
Good morning, Chair Richards, members of the F&A Committee. I'm Paula Rivera, Chief Auditor with the Authority, and today I have a report that we issued. It was an evaluation of the master resource pool for the agreement the Authority has with Stantec. A master resource pool is something the Authority uses that identifies all of the resources on a contract. It identifies hourly rates, indirect rates, and a loaded hourly billing rate that the firms will use for their invoicing. This review is very similar to a pre-award, which we do before the contract is executed. In this case, there was a significant amendment, and there was a request for us to evaluate the rates going forward. So we evaluated the rates for the 24-25 fiscal year. And we found very minimal issues. We looked at 19 subconsultants and the prime. And what we found was there was a discrepancy in currency for a couple of the employees. The Canadian rate was used instead of the US dollars. So that was something that was quickly corrected. We also found of all the employees that are on this contract, there was a single person who had a rate that needed to be adjusted. We found there were 2 small businesses whose indirect rate wasn't ready for review. So one of them will be ready, we believe, in December, and the other needs just a little bit more time. So we'll continue to work with them when their information is ready. And then we found for 3 of the 19 subconsultants, we found some minimal technical adjustments. And so we've identified those here in issue 5. So the master resource pool has been updated, and those rates will be used going forward for fiscal year 24-25. Any questions?
Any questions for Ms. Rivera? See none. Thank you very much, Paula. The next item on the agenda is our executive report from our acting Chief Financial Officer. Good morning, Ms. Daniel.
Good morning, Mr. Chair and board members. This morning, I'll be providing an overview of the November executive summary, which covers data through August 31st and is a summary of our financial activities. Do we have a slide deck? Okay.
Are they unable to put the slide up?
Thank you. Our first slide covers two reports. The first report is the Accounts Payable, Aging, and Disputes Report, which summarizes our monthly invoice processing. We have good news here. Due to the continued hard work of the accounting team and others, we've gone another month without any late payment penalties, which brings us to 7.5 years of prompt payments. Moving to the second row of the slide in the dispute summary of the chart, you can see we're tracking $156.5 million in disputed invoices with contractors. This is about $1.4 million lower than last month and is primarily due to decreases in Dragados disputes. Of the $156.5 million of current disputes, approximately $155.1 million are related to Dragados. Moving to the second part of the slide, we have our cash management report. And this is a summary of the cash balances we have in each of our 3 state funds. So moving to the last column on the right, you can see that Prop 1A bond funds are coming in at approximately $262 million. And this reflects a decrease of about $74 million due to expenditures. Although not reflected in this particular report, we do have some recent bond sale information that I wanted to share. The Treasurer's Office conducted a bond sale in which the authority received $250 million that posted on September 5th. So these dollars will be reported in next month's cash balance. And also we received an additional $750 million from a bond sale that posted on October 10th. And those dollars will be captured in the October data.
Can you just tell us then, how does that impact the amount still available in Prop 1A funds that were originally reported at the 1.58 billion?
Yeah, so those dollars will be taken away from future bond sales. We have over $1 billion still left in future bond sales for Prop 1A. So this just allows us to have the cash balances on hand to pay invoices.
Okay, thank you.
In the second row, cap and trade funds are showing at about $3.4 billion currently, which represents an increase of $252.3 million. This is a result of 2 factors. First, we had expenditures that totaled nearly $25 million. And then secondly, the proceeds of approximately $281 million posted from our May 2024 auction. Additionally, we have an August 2024 auction that has not posted yet. Those proceeds are still pending. And as a reminder, our initial estimates put those at an additional future $130.4 million.
And is the smaller amount the result of the pricing in the market from what we've seen in previous quarters?
Primarily, the smaller amount this time is due to the off-the-top calculations that Department of Finance has taken all in the auction of August. They historically have spread the off-the-tops over multiple auctions instead of doing it at the beginning of the year. But this year, they started a pattern, I think, to start taking them from August auctions.
Okay.
Lastly, we report that the rail property management funds remain at approximately $12.3 million. We can move to the next slide,
And
please.
I know it's a small amount, Natalie, but
Yes.
can you provide the members, not today, but I'm just, I'm just wondering why the costs of the maintenance or whatever on the properties that we own, it was at that number. If it was something that was, I'm sure it must have been unusual, but I'd just like to see how it was spent.
We haven't really had a lot of changes in the expenditures. We've been getting lease revenue at around the same expenditure rate that we're spending to maintain parcels.
Yeah.
So that's why we've been hovering at the $12.3 million figure for so
Yeah.
long.
So I'm just wondering why in this month it was the what, the 331,000. So I don't know if that amounts to a single month's expenditures or it was something that was
Oh,
carried over for numbers of months, but it would be good to, I'd just like to take a quick look at what the.
we can provide additional data on that.
Okay, thank you.
Mhm. We can move to the next slide, please. So this slide is our administrative budget and expenditures report, and this shows our state operations cost expenditures. If you look in the first row, you can see that our annual budget remains at $111.9 million. Expenditures came in this month at about $6.5 million, which is 800,000 less, or I'm sorry, more than last month. And these cost increases were due primarily to additional costs in facilities and information technology licensing renewal costs. This puts our total expenditure rate for the year at 10.9% as compared to a fiscal year completion rate of 16.7. I'm sorry, 16.7%. Moving to the last row of the chart, you can see that our vacancy rate has increased by 4 positions to approximately 29%.
With regards to just the positions, Natalie,
Yes.
so can you just explain so that for us and for the public perhaps, but as the number of positions that have been identified and available, how are those changes made monthly? How is it a part of the whole budget process and we're just allotted some number of changes, or are these additional positions that we've asked that get embedded in the budget for the year?
We have an authorized position amount at the beginning of each fiscal year. So that number is the 496 position figure that's in the first row.
Mhm.
And
Where's that come from?
that comes from authority that's given to us through the state budget process. And it's incremental budgeting based on our prior baseline and any budget change proposals that we request that may augment our baseline. So in this case, our baseline is 496 positions. Last year it was 429. And we've received some augmentations in staff as a result of requests.
So it's not, if I understand that, so we're not asking for it, it's just allocated to us.
It is currently
Do we
allocated
then
to us.
determine whether we need the additional spaces?
We made a determination to ask for the additional authority because we felt that we needed those positions to do authorized workload. The recent changes for this July were related to our form to function proposal, where we shifted full-time equivalents that were working in the consulting contracts over to state operations staff. And the reasons for that were because state operations staff are generally more affordable than the consultant rates. So we pay less for them. And then also state positions can cover the work. So by government code, we're required to try to move positions that can cover state work to state positions.
Okay, all right, thank you.
Mr. Chair, what's the methodology for establishing? In my business, I sit down with my executive crew as we move through projects and we decide if we need to hire someone or we don't need to hire someone. Are we doing that here? In other words, is the executive staff sitting down at the beginning of the year, fiscal year, and determining the exact number of positions they need to be filled, et cetera? Or are we just doing it out of the budget office?
It's managed at the branch level, so all of the branches work independently with HR to advertise positions that are most critical for them, and then they're filled as we're able to find candidates, and it's taken on a flow basis. So this past month, we had actually 9 full recruitments, but 4 of them were internal promotions. We had 9 separations, and that resulted in a net reduction of 4 vacancies.
No, I understand all that. I guess I'm
Mhm.
really referring to, is there a methodology where we sit down and really figure out what we need rather than just trying to fill numbers? I don't see, I've never seen that, so I don't know.
Each of the branch offices provided information when we requested the budget change proposal stating the need for these positions based on historical workload that they had been using with consultants.
Okay.
Can I ask, Mr. Chair? I remember when we approved the form to function because we were thinking that it would save us money. I
Yes,
think we did that a couple years ago, now, maybe even longer. I don't think, I know back in September, I was in a meeting, but we had the same kinds of questions. I think you asked our acting executive to take a look at that back and talk a little bit about the need and current positions. We have a state budget. Is this on? Oh, okay. We have a state budget where, I know that it's in across departments, but I also think we're concerned about getting what is the necessary staff. And I know the form of function is important because we're concerned that we have vacancies. But it may be we don't need to fill all those positions immediately. Understand what I'm saying? That's kind of just get to a place where we're using the consultants that we need, using the state workers that we need, and if we have vacancies, are it's slowing you down, or are we spending too much? We're just trying to get it. Oh, 'cause
I-
these numbers don't really tell us.
I can try to provide some additional programmatic context. So the authority that's authorized in the Budget Act gives us the ability and the resources to hire these state staff as we're available. We don't have to hire them all immediately, and it in fact takes several months typically to hire each individual. So this vacancy rate will be high for several months and will probably be chipped away over the course of this next fiscal year. That was the case the last time we did the form to function too. We had very high spikes in the vacancy rates, and it took several months before we were able to make progress in terms of moving consultants off of the consultant contracts and onto the state staff.
Okay, I think the questions you're getting, and I saw it last meeting, and thank you for the assistance on the mic, was just to make sure that we're filling positions we need and really looking at that form.
Yes. Yes.
So follow-up question to that. In just looking at in reverse of that, what happens when the workload slows down? Do we then slow down or release those people that we've hired?
Right now, these positions have been based on long-term historical workload, and there is not any anticipation that these areas would be decreasing in workload based on the programmatic information that we received. So these positions seemed appropriate to move to state staff, since state staff would be able to do the work at a cheaper rate than the consultants. And we did anticipate these all to be ongoing long-term positions.
Yeah, if I
You have a comment?
help my colleague on this, because I did help draft and bring together
Speak into the mic.
the form to function BCP and have Department of Finance experience. The methodology is pretty intense. So we start out every year by asking for concepts from all of our areas in the organization. So every executive has to come up with concepts of what they need to help deliver their work. Those concepts then turn into BCPs. BCPs become proposals that we actually submit to our agency, Department of Finance, and the GO eventually. So it's vetted through multiple levels of review. So justification, workload analysis is conducted almost through every level of the organization and the administration before it is put out to the legislature for consideration as part of the budget. Then the budget committees go through it, the legislative analyst's office go through it. So it's extremely vetted before it becomes part of the baseline of the authority. So currently we have about 500 positions, as Natalie was mentioning. All of those over the years have been vetted through that process to get there. The form to function concept was, how can we deliver the work using our resources more efficiently? So in places where we can use state staff, as Natalie was mentioning, they are more inexpensive. So we converted them. And as we fill those spots, which is technically a little bit harder to do because the whole state as a whole has a decently high vacancy rate, we release the consultants. We let them go. So as work goes up and our work goes down, the consultants is what we're using to help to fill the gap of the ebbs and flows of our organization. So that's the methodology. So the baseline here was years in the making to get to this number, just to provide that context.
Thank you. I think that what you're hearing here is, first of all, we're looking at how do we do the job that we're doing with being extremely sensitive to what we're spending.
Absolutely.
And with regards to that, with regards to forms to function, we're aware that the goal through form to function is to reduce the number of consultants. What we want to also be certain of is that the people that are being hired have the same level or better increased level of experience in the areas of which we are involved in this project.
Yes, and all of our hires on the state side go through minimum qualification requirements.
Okay.
So they're vetted through a process that makes sure that happens.
All right. I'm sure that our new CEO is either already talking with you about all of this or not, but I think that it's something that is clearly going to be on his agenda, as he's just shaking his head. Yes, thank you. All right. Go ahead. Thank you, Ms. Daniel.
Did you have any other questions? Okay, we can go to the next slide, please. Our next slide is our capital outlay budget summary, and this shows our capital project expenditures for the month. In the top row, you can see that our fiscal year allocation remains at $2.63 billion. And the total capital expenditures for the month of August were $141.3 million, which is up about $21.7 million from what we spent last month. This is primarily due to CP1 DB expenditure changes, netting an increase of about $18 million, and CP23 DB expenditure changes, netting an increase of about $3 million. The CP expenditures totaled $113 million overall this month, with CP1 coming in at $58.1 million, CP23 coming in at $46.7 million, and CP4 coming in at $8.3 million. Design build contracts totaled approximately $97.8 million in August, with CP1 making up the majority at $52 million. Moving to the bottom table.
Before you go to that, Natalie, would you look into, or just also send us a quick memo on CP4? I know this is for the month of August, but would you check and see, is that retention that was released, the 7 million or whatever? Because I don't know that there's any work going on in CP4, Daniel, in August.
Okay.
There is some residual work going on. We're still doing some cutovers and tie-ins with semi-tropic.
Could you say that closer to the?
We're still doing some residual work with the irrigation districts, especially semi-tropic.
Oh, with semi-tropic?
Yeah.
Okay.
But
Could you address that when you, in your part of this, and just tell us what's going on with semi-tropic?
Of course.
Okay, thank you.
Moving to the bottom table, we display the capital outlay expenditures by category. Construction costs make up $128.7 million, project development costs $7.9 million, and bookend expenditures make up $4.7 million. We can move to the next slide, please. Next, we'll go to our total project expenditures report, which shows our cumulative support operations and capital outlay costs since July of 2006. Adding this month's expenditures, we're coming in at a total of $13.3 billion. Construction and project development make up the majority of the expenditures at 78 and 11.9% respectively. And local assistance and support operations make up the remaining 10.1%. Moving to the bottom chart, we have our federal funds and state match liability. There was no changed activity to report this month, so we remain with federal funds at a balance of approximately $4.3 billion.
So would it be fair to say then, so we're showing in total cash resources, we've got about 3.6, but of that 3.6, about 1.3 is offset by the liability of state match requirements.
Right, we have the state matches primarily paid out from cap and trade.
Okay, so that leaves us really about 2.3. As opposed to in terms of what's unencumbered of the 3.6, just taking the 1.3 away on the, looking forward on state match
The
obligations.
state match is what we're matching the 4.2 with?
Mm-hmm.
Right, okay.
Yeah, thank you.
Mhm. Next slide, please. This next slide is our contracts and expenditures report, which outlines our contract and purchase order numbers and totals for the month. You'll see the number of contracts this month remains unchanged in the first row at 192. Month over month, the values of the active contracts are also stable at $13.1 billion. The other item that we typically highlight on this slide is in the last row of the top chart, and that's the small business utilization rate, which is slightly up this month at 23.6%. If we move down to the second half of the page, we break that 23.6% into a little bit more detail. The second display, we show construction and professional services by row, and then we also show the small business utilization type by column. In the far right, we see that total construction small business rates are at 22.5%, and professional services small business rates are at 28.8%. And lastly, as of July 31st, we have 860 small businesses working on the project. Next slide, please. Our final summary slide represents our contingency use reporting. The top chart shows our executed contingency use tracking. This month, we have numerous change orders in the CPs that are cumulatively totaling $25 million, and no actions were executed at or above the $25 million threshold. Additionally, outside of the CP tracking, we have $4.8 million in the other category, which is made up of 3 contract amendments. And moving through to the bottom chart, again, there were no change orders to report over the $25 million threshold this month. Next slide, please. This last slide is a forward-looking slide of what we anticipate to be able to share with you at next month's F&A meeting. So it's projected activities as we see them now for the month of September. In the top chart, we see CEP expenditures are projected to be $97.9 million, and as a subcomponent of that, DB expenditures at $80.5 million. If we include other work, our total capital expenditures are anticipated to come in at $127.2 million. In the bottom left chart, we report position summary updates, and currently we're projecting 355 filled positions and a vacancy rate of 28.4%. And lastly, on the bottom right, we show our new federal grants updates, which shows our pending application totals updated to $671 million through the month of September. And that concludes the executive summary.
Thank you. One other question before I ask the other members if they have anything else. On the contingency summary, are we missing it may be me, but are we missing a schedule where it shows how much contingency we have left?
The authority actually updated the reporting displays this month. However, we will continue to report contingency usage that's in line with the program baseline as it has historically been, and we'll continue to highlight any single use contingencies of $25 million or greater to ensure this transparency.
But isn't there normally another schedule that that shows how much contingency we've got left in DBs and overall contingency and allocated and allocated contingency? Yeah, it's a different form, but it's not in here this month. Yeah,
So we are updating that form. And in the next meeting, you will see more details on that.
okay,
And the presentation will be slightly different than the way we were presenting it before.
okay,
It's not available this time.
okay, fine. Okay, any other questions for Ms. Daniel? Okay, good job. Thank you very
Thank
much.
you.
Mr. Horgan, welcome.
Mr. Chairman,
Yes.
is this going to be a repeat of what we're going to hear in the main meeting?
Yes, he's gonna substantially shorten his presentation for here, so we're not gonna hear the same things twice. Correct, correct, Daniel? Mhm.
Yes.
Is there anything that you have that you're talking to us about specifically that you will not be saying again in the board meeting?
Some of it is different, but a lot of it is the same.
Okay. Let's use your judgment as to what you think you need to say to us here today, including the comment on semi-tropic.
Yeah. Okay, I'll
Okay.
be quick.
Okay,
Good morning, Chair Richards and F&A committee members.
good morning.
Okay, contractors' expenditures, as Natalie said, was almost 98 million, which is pretty good for the month of August. That was 52 million for CP1. We had 38 million for CP23 and 7 million for CP4. So CP4, there's some residual work still going on, Tom, and we are working at the moment, we're working on the final completion certificate and the final payment, which will include releasing the retention as well. So we're
Okay.
working through that. We're hoping that we can have that resolved by the end of November. So
Okay,
you will see some payments in the next few months for CP4. But after November, December, there should be no more.
okay.
Okay, let's see, other things that are significant. There was obviously some change orders issued totaling 24 million. The most significant change order was the CP1. That was for environmental staff, basically biologists to help the contractor. Then in terms of program contingency, which I saw you asked earlier, there's 10.4% of the contingency left, which approximately equates to just over 600 million. Okay, construction labor, again, very consistent, over 1,500. And in fact, we did have a record construction labor, which was over 1,752, which was the absolute best week we ever had. That was the end of September. So that was quite significant. And I'm going to scroll through the next couple of slides. So if we can just move to the next slide, please. Okay, there's really nothing here. Let's go to the next one. Okay, project development, still advancing the Merced and Bakersfield extensions. The design is advancing. We're closing in on the 30%. In some cases, we're advancing into the 60% design. In terms of project development, the two environmental clearances, it's really Los Angeles to Anaheim. We're working on the draft EIR and EIS. That is moving satisfactorily, and we'll have a further update at the next meeting. Next slide, please. Okay, we can just skip this one, keep going. Okay, so this one is the construction labor, which I spoke about earlier. So construction labor is, obviously, as you can see, it's been very consistent for over a year. And even in September, you will see an uptick as well. So this is obviously a leading indicator of construction. When we started recording construction labor 5 years ago, it was 297 construction workers. So in 5 years, we've come a long way from 300 approximately to 1,600. So if we can get past 2,000, I think we'll be doing really good in the near future.
Okay.
Okay, we can skip the next slide. Let's see, I think if we can go to the second last slide. Yeah, we can keep going. Okay, so this is the earned value for CP1. Again, the solid blue line is well above the dotted yellow line, which is good. So scheduled performance indicator is 0.95. So it does show that we are tracking for completion by November 2026. However, we are obviously moving below the medium line, and we are depending on starting on the late dates rather than the early dates. So we will have to keep monitoring this to ensure that we do deliver by the end of 2026. Next slide, please. Okay, so this slide is basically the update flash figures for the month of September. Again, you will see the construction labor record month, 1,688 construction workers. Let's see, anything other significant? Utilities relocated, 39 utilities, so a very strong month. So any month that we do more than 30 utilities is very, very significant. Okay, and I think everything else should be included in the next report.
Any questions for Mr. Horgan? All right. Yes, go ahead, Ernie.
Your beginning of your presentation, you talked about the number of people we're employing, which is 1,500 or 1,400, whatever that number is. That's not the goal necessarily. The goal is to have some construction activity that corresponds with that number. So we're building staff again without a corresponding activity in construction. So I don't quite understand that.
So our construction activity is consistent with the labor numbers. It does fluctuate the labor numbers depending on what type of work you're doing. For example, if we're building structures, we have less labor. If we're moving a lot of dirt, we could have a significant amount of labor.
So if you need less labor, but we continue to grow in terms of employees we're hiring. So if there's less labor demand over here for the work that's going to be done, why do we continue to hire them?
So the decision to hire construction workers is with the contractors, and they hire them when they need them. So if you project from 5 years ago to now, when you look at construction labor and contractors' expenditure, it is consistent. Normally, as the contractor ramps up construction labor, it's an indicator of progress. It is not exactly 100% like for like, but it is an indication of progress. And it's a metric that we've been monitoring.
I just don't want you to lose sight of the goal is for construction. That's what we need to happen.
Absolutely, Director Camacho. We are here to deliver construction. That's what we like, and that's what we want to do.
Any other questions? Thank you, Mr. Horgan. We'll see you shortly.
Thank you.
Okay. Any other questions from members of the committee? Okay. Seeing none, then, ladies and gentlemen, the meeting is adjourned. We'll see those of you who can stay at 11 o'clock this morning for our, excuse me, 9:30. That's the old days. At 9:30 this morning, we'll have our board meeting for the month, and thank you. This meeting is adjourned.